Welcome back to the FX Titan Lab. Today, this is going to be a different video. It's going to be more like a transformative video. In this video, I intend to point out a few fixes that most traders, let's say beginner, even intermediate traders, could apply to their trading systems in order to reach profitability or mastery faster. Now, one of the ideas that I wanted to point out were one, the first I the first thing that I feel like most traders should fix is their mindset. And you have to understand that as a trader, the the mind plays a big role in how you approach these markets, right? In the way that you make money, the way you execute, like your mind plays a big role. And as a human being, you have to understand that there are little things that you can control in this world, and one of the things that you can truly control and you have true autonomy over is your mind, right? You can't control your heart. You can't control anybody else. The only thing that you have serious autonomy over is your mind. So first thing that that I feel like most traders should fix is their mindset. Most of the time we have our minds as traders against us. Yeah. We allow the thing of fear creep in. So we have we have uh, we have trade paralysis. We have the doubt come in. So then we begin second guessing ourselves, and maybe we see uh, setups were that were great, and I would just let them slide like that, right? And that's and actually just judging from how I've been trading these past months, I realized that this has been one of the things that has been you know messing with my trading here and there. Second thing that that uh, that I feel like most traders should fix in order to reach profitability a little bit quicker is you have to journal your trades. You have to review your setups, right? And I'm going to with everything that I'm saying here in this intro, I'm going to show you how we can we can apply these these things back to back as we're trading the live markets. But as as you can see right now, we are it's a Sunday, and right now it's pre-market pre-market open for the new week. So we closed off the old week, and this is one of the trades that I took on XAUUSD, and it was a great trade, but there were a few things that I missed out, and probably could have made this trade be better. There were a few things that I overlooked, and we're gonna get into that. And the third thing that I want to point out is that most of the time when your trades fail, there is a reason why. It's not because you're unlucky. It's not because you are not favored by the market. It's not because your system is not working. It's usually the market is dynamic. So in the event that you have a setup, and what is a setup? A setup is like a group of conditions that you are that you are following, like not really, that you've got together and you have crafted this given setup. So in the event that you see these given conditions happening, there is certain action that you take. But you have to understand that most of the time the market isn't perfect. Most of the time the markets are a little bit dynamic. So as you can see, even for example, right here, right, this is a demand zone, right? But as you can see, as price reached to this demand zone, it violated this area. But then again, it seems like it respected the demand zone. So the market is a little bit dynamic, and most of the time, in the event that maybe your setup doesn't work, it's not because you're a bad trader, or maybe the system doesn't work. Most of the time, traders then go strategy strategy hopping, right? Once they just find one losing trade, they switch systems and they keep blaming the market. And most of the time, maybe it's yourself. You haven't applied the system correctly. So that goes into like how you handle yourself, your mind, and you know all of that. So Uh, Now let's get to this trade right here. I think we're taking too much time. We're taking enough time to explain all of that. So now let's take a look. Let's take a look at this trade. This trade is a trade that I placed on around I don't know, was it Wednesday? It was a Wednesday. I placed this buy position. The way I trade, I use limit orders most of the time to get into the market, because most of the time I'd be busy here and there. So this is a trade that I spotted on the gold chart around on Wednesday, when price was being range bound in this area here. So it was the Tokyo session, and I saw that the price had created a high and low on Wednesday, and price was moving in a range bound manner. So I placed this trade here with the idea that price will do the classic accumulation, manipulation, and distribution move to the upside. Now, why did I expect the price to move in such a way? Well, first of all, on the overall time frame, one, we were bullish, right? So looking at the daily time frame, right? Looking at the daily time frame, we were basically what? We're basically bullish, and the idea was that given the fact that we have come from a demand zone, the daily, we respected it. We respected the demand zone in daily. So the only right probable idea would be to continue this up move to the upside, right? So on Wednesday, when I went down to the 1 hour time frame, I spotted this demand zone. Why was it a good demand zone to me? It was also because it led to the break structure here, as you can see, with a wick to body break. So usually I usually when such a move happens, I tend to look for the immediate demand zone. For example, in the event that we're bullish, the immediate demand zone that led to the break to the upside. So here, price came. First of all, what I missed was the fact that price first did this fake out right here, and then after that, it's fake up to the upside. Sorry, it fakely broke above this Tokyo this Tokyo high, and usually when price now breaks above the Tokyo high, now that means that we are going short. We're gonna be selling, right? Because if at all you understand the principle of accumulation, manipulation, and distribution, if at all we want to buy, price has to break below, and then we continue with the distribution. Maybe we get into another trade with a redistribution move. And even though we're bullish, very so bearish. We have to take the high, and we break below the low, and we go for a distribution, or maybe a redistribution if at all you missed the first move. So in this setup, I had the in my mind I had the ideal setup at play, but usually most of the time the market will fake out. Now that's what I didn't see, and usually most of the mistakes that you make should be uh should be like a mirror. You should look at every trade surgically. If at all you want to really do this thing for the long term, you have to surgically look at what the hell happened. So there were a couple of factors, and I'm going to also break those down. Now those are I'm gonna keep those ones for the ending video. Sorry, for the ending part of the video, and trust me, they are worth it. They are worth it. Trust me, they are. Uh, though the first thing that we could see off the bat, right? We could see that this this perfect setup that I wanted, this one, this one, didn't happen. What happened instead was after price, after price did this accumulation right here in the Tokyo, for the Tokyo, ready. trading these highs and lows and stuff. First of all, the for almost the whole day here, we were ranging. Even the New York session failed to break above or below. The London session failed to break above or below until Thursday. Now on Thursday, that's when this fake out happened, right? So so usually this AMD setup happens. It's supposed to happen. It ideally happens during the day, but then what happened? This did happen the day. It happened now the following day. We had a break above the high. It was fake out, and after the break above the high, like it would have showed maybe for people who trade a breakout, they would say that okay, price is going to go bullish. But then what happened? Price broke then broke below. There was a demand zone down there, so this demand zone here got a little bit violated because now see this above here there was this extra liquidity that price said collected above, so that means it had extra power coming into this demand zone, and we got a little bit of a violation. After that, we had this retracement move, which was about 500 pips and stuff. Then after that, price reversed. Now this concept here, this whole concept here, I was going through some of my journaled trades, journaled concepts. I have some notes that I wrote down something like 2 years ago. That was like in 2023. So I remember that was like it was like in July. I was reading the the naked forex forex book, and in that book there were a couple concepts that I felt like I would never ever need uh, in my trading. And one of the but then funny thing, as I was scouring through my notes to see where the hell I went wrong in the way that I executed, in the way that I analyzed this chart or these markets, because I realized that I realized that in that book they had this very setup, and this setup is called the last kiss. Yeah, the last kiss is a concept that helps you to refine to refine uh your trade idea, to or no to validate, sorry, to validate your trade idea. Now here, this trade idea was not validated the way I wanted to, the way I wanted it to be validated. Let me show you something. So as you can see here on the, I'm gonna show you. I'm gonna put the sessions on. It's a little bit messy, but bear with me. Bear with me. So you see the whole day of Wednesday, we failed to break above this whatever this Tokyo high. So we broke above the Tokyo highs, or even the lows. Broke first we broke above them, changing the selling, sorry, changing our buying narrative to begin with. Because at first, one of the things that went wrong with this trade was, one, the narrative was off. You have to understand, when you're wrong, and there's nothing that you can do about it. But you just have to, you just have to take it just like how it is. So first thing, the narrative was wrong, but the zones were valid. The zone was valid. But then usually when the market, now in the event that, now the setup that I had here was a per trend type of setup. The way I had designed this setup, right? But I got the market did something else at that point right there. Mm. So that means my idea was invalidated. So now this level here for entry becomes an entry for a retracement move, and a retracement move only, right? So that's where you have to review. That's where the thing of reviewing your setups comes in. And the reason why this zone also failed eventually, well, it was simple. The market had changed narrative. So you have to, before you begin blaming anyone else, you have to first begin blaming anyone else. People blame the news, Powell, and all that stuff. Most of the time, there is something that you've missed, so you have to look for it. So one of the concepts that I figured out that were causing this was one that I didn't use that last is concept. With these trades whereby is accumulating in a range, it's moving in a range, as you can see on Wednesday. We moved sideways almost like the whole day. The whole day was range bound, and we couldn't do much. I couldn't do much in this trade. I saw some guys placing some trades here and there, but I was like, nah, it's not for me. So that's why I placed this. I placed some of my I placed a limit order there at a zone that I felt was ideally understandable to me. And as you can see, anyway, as price came back to this level right here, even though it had wicked me out, it took me out prematurely. It took me out by about 50 pips because I had my entry level around there. Stop loss was around here. So I was at 30 pips stop loss, but then it took me out by like 50 pips. I remember, like 50 pips. Okay, it took me out by like 30 pips. Okay, fine. But then after that, price confirmed the direction. Then it first moved sideways, uh, up to up to some support area, no, resistance area. Yeah, this resistance, I support and resistance anyway. Uh, so in the concept of the last kiss, now this is referred to as after we have a fake out. That means the market has that means usually that's a signal for a reversal in the market. And the way we can capitalize on this is one, you could wait for I think they call the retouch, you know, or the last kiss. So usually after price does such a move, because now because here now, for example, uh, in this concept right here, price reversed our idea. So instead of being pro trend, now the trend here, this was a point where the trend shifted, it changed. So from being bullish to bearish. So at this point here, we could have come in here for that retouch, and we sell lower. And actually, I see that price go for like 1,000. Okay, it was like 800 pips, but you get the idea. Yeah. So but then again, could we have known this earlier? Well, we could have. So there is another concept that I saw coming into play. Let me remove this uncurved profile. Let me clean the charts. Let me just delete literally everything. Cool. So there is another concept that I came across, but still from the Naked Forex book, right? There is another concept that I landed upon, and the concept is one to show you these moves before they occur. These these re- these reversal these reversal moves. I think I found it on FX Open. Right. Yeah. So there are some part informations that form in the market, and usually they give us an idea of the market making a move before it even does. So one of the things that I saw was this right here. Now this is something that is a pattern that I saw repeating on even another pair, and that pair was US 30. And this right here is called the bearish belt. In the event that we are bullish, it will look now this would just be inverted to the the downside. Now, this right here was a signal that price was not going to go up here to take this swing right here. And on seeing this, I now started to see that this could be what happened like at the beginning of this year when we had created the swing high in 2024. We created this swing high on gold, and then price was failing to break above this zone here for some time. So we had some range bound price action take place in this given period of time. So it's something that I now see that is probably going to happen on gold right now, because as you can see that we created the swing in this year. Like, was it in April? Yes, in April we created the 3,500 price price level, which is now our highest ever price on gold. And coming from the last week, price failed to break above this level right here. So that means we're going to have some range bound action take place. And one of the things that I expect to see is, one, we need to see price first take this low. I feel like this low is going to get targeted, and we most probably, as, as I said in some other videos of mine, the lives that I was doing in the weeks earlier, we could probably now truly come for this level down here. Why? Because also another thing, this level failed to break the to push price to break that high, and now we're instead just reversing. So we just have to keep in mind that we have a couple of factors in play. One, we have the bearish belt. Two, we have on the executioner time frame. My executioner time frame is the 1 hour. My executioner time frame right here, we had a fake out as we were trading. So this changed, and ideally this changed the narrative. And as you can see from down here, we're having a bullish move, and it seemingly seems like, price confirmed the direction. But then guess what? This move, this move right here is coming out of thin air. Okay, somebody would be like, no, it's coming from a fair value gap. But from what I know about fair value gap trades, they're not strong enough. If at all price is not coming from a support, no, sorry, from a demand or a supply zone, that move most of the time is short lived. There are also times where demand zones maybe also don't work out, just like what we saw right here. But that was only because now the trend had shifted. The true trend had shifted on gold. So, oh, and also another thing, this low here didn't lead to the break above here. So yeah, I also expect this low to get targeted, and we look for a better zone that we could enter in at. Now I'm going to show you something else. So yes, first of all, yeah, we could have avoided this loss down here. As you can see, even at this point here, there was another bearish belt that happened. Now let me show you something. Now this is US 30. And I'm going to show you now what a bullish belt looks like, and it's also going to probably give us an idea or a clear understanding of what is happening on US 30 and why it is buying right now. As you can see, US 30 was coming from a strong downtrend, but up until this point here, where we saw price print for us now this is what we call a bullish belt. Now bullish belts and bearish belts usually happen at the beginning of the week, or sometimes on Wednesday. And usually the beginning of the week, uh, well, that's when the market opens, and Wednesday is usually the day where price where the price on most pairs reverses. and we get maybe the true move, and yeah, and we get the true move of the pair at that given week. So that's something to keep in mind. Keep in mind. Sometimes some brokers will not show this, but this is the bullish belt, and it's usually caused by institutional selling over the weekend. Weekends like this, we'll see we'll see institutional money flow into the markets, and most of the time it catches retail traders off guard, and that's how we get losses in the event that we neglect some things like this. So yeah, that's basically it for now. It's not gonna be. I'm not gonna do a serious um, chart analysis video right now, but yeah. So you have to look out for these bullish builds here and there. I, and it's important to journal your trades. So in the event that they didn't journal all those years ago, 2 years back, that information that I had stumbled across, well, I wouldn't have the answers that I need right now. I'd be thinking that maybe it was luck, maybe it was all that, but no, there's always a reason why something happens. So yeah, if you found this helpful, you can just reach out into the description down below. I think I'm going to leave my Telegram channel down in the description down below, where I will uh I'll put that Naked Forex book that in the group side. You guys can be able to download it and read through it. We gotta keep information is what makes us money in these markets. And if you like the video, like, share, subscribe, and that's it for now. We'll do a pre-market analysis video later. Actually, it will be a live video. I think I'll do one on Monday after the market has opened. Because right now things are a little bit shady as hell. All right, that's it for now, and I'll keep you guys posted.